Welcome to the Deep Dive. Today we're taking on what has to be one of the most persistent and, frankly, frustrating hurdles in global finance.
No, it's a massive one.
It's this question. How do you, as a non-resident of the U.S., legally get into the American banking system? Especially if you don't have that, that golden ticket, the Social Security number.
It is a huge sticking point. I see it all the time with international founders or, say, real estate investors.
Yep.
The U.S. financial institutions, they're driven by these really strict regulatory mandates, and they've basically put up a barrier that just seems insurmountable.
Right.
You can have legitimate financial interests, a valid business, all the money in the world, but if you can't check those specific identity boxes, you're just locked out.
Feels like the ultimate bureaucratic maze. So our mission today is to give you the shortcut. We're going to unpack the alternatives to the SSN, talk about the ITIN, the EIN, and really drill down into the regulatory architecture that forces banks to be this strict.
Yeah.
It's a deep dive into regulation, documents, and maybe some unexpected workarounds.
Okay, so to start, we really have to clarify the three big identifiers. You probably already know the SSN, the Social Security number. This is, the master key for most traditional U.S. banks.
Right.
They use it not just for taxes, but for instantly checking you against things like credit reports and fraud databases. It's the gold standard for identity in the U.S. system.
Okay, but if you're a non-resident individual and you're not eligible for an SSN, then you need the ITN. That's the Individual Taxpayer Identification Number.
Precisely. The ITIN is issued by the IRS, but only for tax purposes. It basically tells the U.S. government, hey, this non-resident person needs to file a U.S. tax return. Maybe they have rental income, for instance.
So it's a personal ID for tax stuff, totally separate from immigration status.
Exactly. It tells the bank you're a legitimate taxpayer, but, and this is key, it doesn't automatically give you access to all those other domestic verification tools.
And then for the entrepreneur, there's the EIN, the Employer Identification Number.
And that's the federal tax ID for the business itself, your LLC, your corporation. It identifies the entity. But, and this is another big but, getting an EIN doesn't let you bypass the need to verify the personal identity of who owns or controls that business.
Okay, so here's where it gets really complicated for you, the listener. The sources are pretty clear. For a personal account, even if you have an ITIN, you still face this massive obstacle. So why is the U.S. residential address such an absolute gatekeeper?
It connects right back to that reliance on domestic verification systems. When a bank, let's say a big one like Chase, tries to form a reasonable belief in your identity, which is the legal standard they have to meet.
Okay.
They run your info through systems like check systems, or they look for utility bills, driver's license records, and those systems are built entirely around matching an ID number, an SSN, or an ITIN to a physical U.S. residential address.
So if you don't have a utility bill or a lease with your name and U.S. address on it, the system just fails.
It fails immediately. The verification process just stops.
So let's use Chase as our benchmark then. Let's imagine an e-commerce founder based in Canada walks into a branch. What are they going to ask for?
Well, they're going to demand the SSN or the ITNN and that U.S. residential address. If you have the ITN but no U.S. address, you're probably stalled right there.
And what about online?
Online is even stricter. Unless you have a U.S. SSN and a U.S. state-issued ID like a driver's license, the system just won't let you progress.
So those 6 basic steps for opening an account, choosing the account, checking eligibility, filling out the form. You're saying a non-resident usually fails at step 2.
Step 2 and step 4, absolutely. Yeah. The eligibility check, step 2, requires both the ID number and the address. Then presenting the paperwork, step 4, requires specific documents. You need 2 forms of ID.
Okay, like what?
Your primary could be your passport, that's fine. But the secondary ID, which often is what has to show that U.S. address like a utility bill or a U.S. driver's license, that's the wall most non-residents hit. You need that physical proof.
The rigor is just so intense. And I mean, that brings us to the core driver of this whole headache. This isn't just a bank's internal policy, right? This is coming from the government.
That's right. The source of this obsession with identity verification is Section 326 of the USA Patriot Act.
Passed in 2001.
Exactly. That legislation didn't just suggest banks be careful, it legally mandated that they implement these robust identity checks, specifically to prevent, money laundering and terrorist financing.
So the program that every single regulated financial institution has to implement is the Customer Identification Program, or CIP. It sort of forces banks to act as border agents in a way.
That's a really good analogy. Under the CIP, banks have 3 essential jobs. First, they have to verify the identity of anyone opening an account to form that reasonable belief they know who you are.
Okay.
Second, they have to keep records of your info name, address, date of birth, ID number for 5 years after the account is closed.
And the third.
And maybe the most critical, they have to check you against global watch lists. It's a huge step in counterterrorism finance.
So for a non-U.S. person, what can the bank actually use instead of an SSN according to the law?
The law is surprisingly detailed, but it does offer some flexibility based on risk. They have to get your name, date of birth, and both your residence and mailing addresses. For the ID number, if you're a non-U.S. person, they can accept an ITIN or a passport number and country, an alien ID card, or any other government ID that shows your nationality and has a photo.
So it sounds like they have some latitude to accept foreign documents, but they still have to verify them somehow.
That's the key. The procedures have to be risk-based.
Hmm.
So if you're applying online and you're not physically there, or if you show up with a document the teller isn't familiar with, the bank has to use non-documentary methods.
What does that mean?
It usually means pinging fraud databases, cross-referencing names against addresses. If your name and date of birth don't match any known address, even with an ITIN, their risk model flags you immediately.
Okay, let's pivot to the entrepreneur. If the individual path is blocked, a lot of people think, okay, I'll just form a business. They hope for a loophole. But does forming an LLC actually solve the personal ID problem?
The short answer is no. It solves the business's tax ID problem by giving you an EIN, but it immediately creates a new hurdle: beneficial ownership.
And this is the customer due diligence rule, the CDD rule. That's more recent than the Patriot Act, right?
Yeah.
What was the idea behind adding that?
Yeah, context here is everything. After things like the Panama Papers scandal, governments realized that shell corporations were, the easiest way to hide illicit funds. The CDD rule was brought in to stop entities, not just individuals, from being used for money laundering. It forces banks to look past the EIN and find the real humans behind the curtain.
So what information does the bank have to collect on those people?
They have to collect and verify the name, date of birth, and physical address for two groups. First, anyone who owns 25% or more of the equity, and second, anyone who has control.
And control can be a bit subjective, can it?
It can be. It's usually the person with the power, the CEO, CFO, managing member, anyone who can make strategic decisions. The headache for you, the non-resident founder, is that the bank needs that same level of verification, SSN, passport, alien ID, for all of those beneficial owners.
Wow.
So if you have a complex foreign ownership structure, proving the identity of every single owner becomes a nightmare for you and for the bank.
And yet we do see some major banks that are known for being a bit more accommodating. Why is that? Why the difference?
It really comes down to internal risk tolerance and, frankly, specific branch training. Bank of America, for example, is noted for accepting non-citizens with an ITN or passport, two forms of ID, and proof of both a U.S. and a foreign address. They're a bit more flexible. Wells Fargo is similar. They'll let non-U.S. citizens apply in branch without an SSN or ITIN, but you have to bring in that very specific government ID and, again, proof of a U.S. address.
But the common denominator is still that proof of a U.S. physical address.
Mm-hmm.
Even with the ITIN, even with the passport, if you don't have a piece of mail or a lease, you're pretty much stuck.
That is the ultimate gatekeeper. The banks that people see as flexible are usually just more willing to accept alternatives for the ID number, but they almost never waive that residency verification requirement.
Okay, let's turn to some practical solutions.
Yeah.
If our Canadian e-commerce founder just can't meet that U.S. physical address requirement, what are the legitimate international alternative? How do you bypass this choke point?
You have to step outside the traditional U.S. banking system. You look toward global fintech platforms, or what are called money services businesses, MSBs. They operate under different rules.
This is where the real flexibility is.
Exactly.
And this is where we hear names like Majority and Wise. How are they getting this done without demanding a U.S. SSN or a local utility bill?
Well, it's crucial to understand they are generally not regulated as U.S. banks. They use different Know Your Customer or KYC providers, and they rely much more heavily on international identity standards. Majority, for instance, focuses on migrant communities. They accept things like a valid passport, an ITN, a Mexican matricula consular card, other foreign government IDs. Their whole system is built for that population.
And Wise, which gets cited all the time for international business, offers a slightly different but really powerful solution.
Wise is a fantastic example of a non-bank MSB. It gives you multi-currency accounts, and you can open one using proof of address from your home country.
So it completely bypasses the U.S. residency issue.
It does. And the powerful part is that it then gives you local bank details, including U.S. writing and account numbers for up to 10 currencies. They satisfy their KYC rules through their UK or EU licenses, which lets them accept foreign proof of address, even if the account is going to hold U.S. dollars.
So the workaround isn't that they're ignoring the Patriot Act. It's that their initial onboarding is governed by a different set of global standards.
Precisely. They are still doing rigorous KYC, but the documents they accept are international. It lets the non-resident get into a U.S.-adjacent financial environment without physically moving there.
Let's circle back to the ITN for a second, because for anyone who does want to go the traditional U.S. banking route or just needs to file taxes, it's the absolute linchpin. If you know you need one, how do you navigate that application?
The whole process is handled by the IRS through Form W-7. And crucially, you usually need to attach a completed U.S. federal income tax return when you submit it,
Right.
unless you qualify for a very specific and pretty rare exception.
And the logistics of just submitting the paperwork can be tricky, right? Especially with the identity documents.
You have 3 options, and they each have pros and cons.
Yeah.
You can mail everything to the Austin Service Center.
But that means mailing your actual passport.
Yes, your original crucial documents,
Yeah.
and it can take weeks to get them back. Alternatively, you can apply in person at an IRS Taxpayer Assistance Center, or you can use a certifying acceptance agent, a CAA.
And what's the big advantage of using, say, a CAA?
Well, the CAA, who will probably charge a fee, is authorized by the IRS to authenticate your documents, especially your passport, and then hand it right back to you.
Oh, wow.
They don't have to mail your originals to the IRS, which it drastically cuts down the risk and the time. It streamlines that whole bottleneck.
What about timing? If you're planning a U.S. business launch, how much buffer time should you plan for getting an ITN?
The IRS officially says about 7 weeks for processing.
Okay.
But if you apply during peak tax season, so mid-January to the end of April, or if you're applying from overseas, that wait time reliably stretches to 9 to 11 weeks.
So you really need to plan ahead.
You need to plan ahead,
Yeah.
and you need patience.
So to synthesize all this for you, the listener, getting access to U.S. finance without an SSN really hinges on getting an ITN or an EN. And, critically, having verifiable proof of a physical U.S. residential address for any traditional bank. If you just can't get that proof of residency, you have to go for a non-bank alternative that uses a more global KYC system.
That is the perfect summary. The difficulty here isn't random. It's a direct result of U.S. law, specifically the Patriot Act and the CDD rule. They mandate this deep identity check. The whole system is built for domestic verification, and it just struggles when it meets non-domestic residency.
If we connect this to the bigger picture, it raises an interesting final thought. While these customer identification programs are, they're rooted in counterterrorism and anti-money laundering, the Treasury Department actually thought there would be a secondary benefit for consumers.
Oh, interesting. What was that?
They believe that these rigorous identity checks, forcing banks to know exactly who you are, would ultimately reduce fraud and identity theft for new accounts. So it's this massive regulatory system designed for national security, but it may somewhat inadvertently offer you a bit of personal financial protection, something to mull over the next time you're gathering all those documents.